Hey there, investors. It's Ian, and today I'm diving into a hot topic that's been shaking up the market. We're talking about Carvana and the bombshell report that dropped from Hindenburg Research. So, is Carvana's turnaround the real deal or just a mirage? Let's get into it. On January the 2nd, Hindenburg Research disclosed a short position in Carvana, and they didn't hold back. According to Hindenburg, Carvana's recent success is nothing more than smoke and mirrors. They claim it's propped up by unstable loans and some creative accounting tricks. First off, Hindenburg alleges that Carvana engaged in $800 million worth of loan sales to a suspected undisclosed related party. That's a lot of money under the table. If true, they're also pointing fingers at Carvana for manipulating their books and using lax underwriting standards to make their income look better than it actually is. And that's not all. They say insiders have been cashing out stocks worth billions and masking high delinquencies by granting loan extensions through drive time. Now, drive time is run by the CEO's father, Ernest Garcia II, who's also Carvana's largest shareholder. Talk about keeping it in the family, right? Now, Carvana has fired back, calling these claims intentionally misleading and inaccurate. They say Hindenburg is just recycling old arguments from previous short sellers. According to Carvana, they're on track for a successful 2025 and are sticking to their plan. But this isn't the first time Carvana's been under the microscope. The Garcia family's control over the company has faced criticism and lawsuits alleging self-enrichment schemes before. Carvana was spun off from Drive Time back in 2017, but it still relies heavily on the company for things like loan servicing and revenue sharing. And don't forget, Drive Time was once a bankrupt rental car business called Ugly Duckling, grown into a dealership network by Ernest Garcia II, who has a prior conviction for bank fraud back in 1990. Yeah, that's some history there. So, what's the market saying? Carvana's stock closed at $199.56 on Thursday, down 1.9% after the report came out. Not a huge drop, but definitely something to keep an eye on. Now, it's important to note that CNBC couldn't immediately verify Hindenburg's claims, so we'll have to wait and see how this plays out. But it's definitely a story worth following if you're invested in or considering investing in Carvana. That's it for today, folks. Stay tuned for more updates and be sure to hit that subscribe button for all the latest market news. Thanks for watching and see you next time.